Custom duties for gold and silver were slashed to 6% from 15%, and similarly for platinum it was slashed to 6.4%. Now, what is the impact of this overall on the sector and gold companies? Well, on the positive side of things, well, it creates a level playing field for all these retail companies, and this would curb the overall gold smuggling that has been happening in the unorganized sector. Plus, demand, which was which was sitting on the sidelines because of the kind of hike in gold prices that we've seen in the past 2 quarters, will now pick up, and the kind of inventories that a lot of companies are sitting on, this inventories will now get cleared away. Now, plus a lot of festive sales will be picking up coming in Q2, and this can be a positive for Titan, Kalyan, Senco, etc. Now, on the negative side, there could be inventory losses for the company because companies have already bought the inventory at the higher prices. So the real impact will be known in Q2, and overall quantum will depend on how much inventory each company holds. And just to understand the impact of this particular slash in custom duties, well, the gold prices, that is the 995 gold prices, have slashed down by 5% today, and similarly 999 silver has slashed by 3%, the spot prices in trade today. So this is the overall impact of the budget announcement of cutting import duty on gold and silver.
Now, high customs duty was impacting the gems and jewellery sector, said Sanjay Agarwal, CBIC chairman. Listen in to what he had to say when asked if the reduction was done to curb smuggling.
Naturally, earlier, because of this high rate of duty, there was a huge price arbitrage between international prices and domestic prices. And I would say that this high rate of duty was again impacting the gems and jewellery sector. And gems and jewellery sector, they provide huge employment. The number of employment which is provided by them is to the tune of 50 lakh people. And they contribute significantly to the exports. And I think that is almost 8% of India's exports. So that sector is very important for the purpose of employment as well as for exports for the country. So there were representation from them because this high rate of duty was impacting their cash flow, because the capital used to get blocked in payment of customs duty, and so that was a hindrance.
And to discuss this further, we're now joined by G. Chandrasekhar, who's a commodities market specialist. Mr. Chandrasekhar, thank you and good evening. Mr. Chandrasekhar, everybody who's watching today, the only question on their mind is, should they buy on gold after the slash in custom duty, or would you suggest that they wait, because obviously, the past inventories are still there?
My sense is they should wait, because I see a further downside risk to gold and silver prices in the short term. Okay, and therefore it would be worth waiting. But let me also mention that there is obviously some justification for the government of India to reduce the customs duty on gold, which was as high as 15%. In the last 2 quarters, international prices and domestic prices had actually risen by about between 20 and 25%. But look at the relief. The relief is 60%, from 15% to 6% is a 60% relief. Therefore, honestly, and I want to be blunt, I don't know what considerations lay with the finance minister and the finance ministry to give such a big relief in gold custom duty, because this is also going to cost. There'll be some revenue will be foregone. There'll be some revenue loss. How much is the revenue lost? We still don't know. That has not been quantified. Well, the jewelry trade is very happy, and therefore we should be happy that at least one section of the trade is happy about it. But I think the government has to come up with some rationale why duty was cut by as high as 60%, from 15 to 6%. This is number one. Number two, a lot of people are asking me, what impact will it have? Will demand for jewelry go up? With due respect, in my view, there'll be a marginal increase in demand for jewelry, physical jewelry, primarily because of the upcoming festival season, and then of course the marriage season, etc. But medium term, even these current prices are in some way leading to demand destruction, and people are not going to enjoy buying at even the current lower levels. And therefore, there will be an impact on the trade and on consumption of gold within our country. Over say you will see it in 2025. Put it that way. Yeah.
Right, and as we are flashing those graphics on the screen, your view on Titan, Kalyan and Senco, especially with respect to inventories that are held by them. Of course, Titan usually holds the most.
Right. Obviously, those companies that had bought gold at higher prices, say $2,200, $2,300, $2,400 an ounce, will all be ruining now, primarily because the prices have sharply corrected, both in dollar terms and in rupee terms in particular, and therefore they would, in some way, there is an inventory loss of value in their inventory. How they would recover, whether a quicker liquidation of these stocks at lower prices would help, is a call they would take. But the answer to this question is how much inventory, high price inventory, each company is holding. And we won't know how much high price inventory each company is holding. But more often than not, most companies actually average out the prices, and therefore not much of inventory may be purchased at, say, $2,300 or $2,400. That's my view. And therefore, the loss of inventory value may not be very high, put it that way.
Right, Mr. Chandrasekhar, I also wanted your view on sovereign gold bonds. Now, in the past, they have provided for steady returns. But obviously, with this cut in customs duty, people who are looking to redeem now, how do you see the impact on that?
Obviously, after 5 years, people are free to redeem, although the tenure is 8 years. And therefore, when prices are down, people will have to take a call whether should I redeem it now or wait for 1, 2, or 3 years if prices would rise. I think it's a very, very tricky situation for them, because in the international market, let us be very clear, gold at $2,300 or $2,400 an ounce actually carries up to $200 an ounce as war risk premium. Assume a situation, maybe hypothetical, tomorrow there is a ceasefire, both in Russia-Ukraine conflict and the Hamas conflict. Gold will collapse. It'll come closer to $2,000 an ounce. Okay, and that's the war risk premium that the market carries. And then the financial investors who are heavily invested in gold as speculative investment, they'll also be exiting the market. Therefore, there could be a big correction. But it's a hypothetical situation. You can't rule out the possibility, though. Therefore, for gold sovereign bond holders, I would think it is safer to redeem soon, as soon as possible. But also remember, my call is in the last quarter of this year, gold prices will have the potential to rise from the current levels.
Right, and final question, of course, we just heard comments about how the government actually did this, keeping gold smuggling in mind. What's your view on that? And the second part I wanted to ask you is the organized sector versus the unorganized sector, where a lot of people in India still buy gold in cash.
Right. See, it's like this. On smuggling, my take is very clear, and I want to be very blunt. There is one section of people in the trade that exaggerate the impact of smuggling. Smuggling did happen in this country in the 60s and the 70s, even in the 80s. And we've also seen Hindi movies, a boat coming from Dubai with smuggled gold, etc. Those days are over. The government has enough surveillance mechanism, enough of coast guard and security related facilities. Therefore, it's not possible for anybody to smuggle gold in very large quantities. It is possible passengers coming may carry one coin of gold or 2 coins of gold and kind of escape. But I don't see that as a big case of smuggling. Therefore, the excuse or the reason given that it will reduce smuggling, to my mind, seems very, very superficial. I don't think it will hold water, honestly. Number two, what is the second question? Sorry, what did you say?
Because, a lot of people are still buying gold in cash from the unorganized sector. So what's your view on that?
Correct. Oh, no, obviously, it'll happen because they would want to avoid the duty component of this. And there are sellers who are willing to compromise, and there are buyers who are willing to pay cash and compromise. But all said and done, let us be honest. Our country, there is an informal sector almost everywhere. We cannot wish away the informal sector. And the informal sector also contributes very substantially to India's economic activity. I'm not saying, I think we should not dismiss the informal sector, because it is a good big contributor to economic growth. We need regulation, which is very important. But given the vastness of this country and the levels of income and the rates of taxation and the motivation to remain in the informal sector rather than in the formal sector, which is subject to huge amount of regulation and discipline, I think we need to look at all that. Therefore, there will be a set of people who will want to buy gold informally, paying cash, and there will be a set of traders who will be happy to sell to those buyers. And therefore, it's both the responsibility of the buyer and the seller to have some kind of self-imposed discipline. But this is how it has been going on. But over the last 10 years, I find the informal sale of gold is very substantially reduced. There is a certain formalization of this gold business. I've actually written a policy paper for the SEBI and for the government of India. What are the reforms that are required in the bullion sector and the gold jewellery sector, and how India can actually become a price setter. We are today a price taker in the global market as far as gold is concerned. Although we are the largest importers, we should be setting international prices. And there are several steps that the government needs to take for us to become a price setter. Once we reach that situation, I think there'll be further decline in the informal business in gold and silver.
All right, Mr. Chandrasekhar, thank you very much for joining us on the broadcast and explaining to us. Of course, his advice to all those of you who are looking to buy now is to wait for some more time. Thank you for joining us.